My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to My Trading Game Plan. Of course, I'm Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. As always, we're going to go into charts and into data, no hype, no nonsense, no narratives, as we explore what trades are the top trades of the day. So let's dive right into the S&P futures here. S&P futures, we can see again, yesterday, this was the price action. We kind of opened and rallied into the open, then rallied for the first half of the day, and then kind of consolidated the remainder, right? And again, this black area here represents the current market, or yesterday's market day, 9:30 to 4 p.m. What we then saw is the market's kind of just going chopping sideways up a little bit, and then we had this interesting little sell-off in the overnight period, right around 3 in the morning, although markets have recovered overall. Now, again, what's causing this could be a bunch of different things. We're hearing more news coming out of Venezuela, potentially, again, not as easy for the U.S. to just go in and dictate policy as initially maybe the markets had assumed. In addition, there's obviously other catalysts or criteria here, including the fact that Venezuela was selling oil to China at ridiculously cheap prices. So we can imagine China's not too happy as of now. Now, again, that takes us over to my top play for the first half of 2026, and that is crude oil. Now, why am I bringing this up today? Well, again, we talked about how over the last couple of weeks, we were making this bullish wedge pattern. We then developed a bull flag right here. And notice how all of a sudden we have news out in the oil sphere, and we're starting to get a breakout right there on crude oil. Now, it's not a confirmed breakout, so we don't want to jump the gun just yet. Let's see where price closes today. Does it close above the trend line? If it does, can it confirm the breakout tomorrow? If it does, then again, the thought process here that I kind of developed in the final month of the year for where I like money to kind of rotate, it would then be fully in play in the first couple months to half year of 2026. Pretty cool stuff, though, to see the chart and kind of be walking you guys through how this chart was bullish, the thought process behind it with money rotation out of potentially some of the other commodities that have made major moves. And then ultimately, we see what happened with Venezuela and potentially triggering a bigger move in oil. All right, let's flip back to the S&P 500. Let's go to the daily chart. We want to continue to monitor this daily chart. Again, yesterday we talked about the parallel that has been intact since 2020, marking every major high and low in the S&P. We then talked about this white trend line right here, which basically gives us our defined possible breakdown, right? So ultimately, we haven't broken down yet, but if we take this out and confirm below it, you would then say, okay, the uptrend since the April 2025 low, which was the liberation sell-off low, that uptrend, aka trend line, has now been broken. It hasn't yet, but it is something on my radar. Vice versa, we can watch this upper trend line. Essentially, what we know is the S&P can stay in basically about 130-point range inside of here, but it's going to get tighter and tighter and tighter until eventually it's forced to break one way or the other. The thesis here will be that whichever way it breaks, that will be a larger move, potentially 10+% in either direction. Now, if you look at the history of upsloping parallels, they usually will break when they're at the high end, just like we saw in 2021. They generally, probability-wise, will break to the downside. So again, that would be if you were a betting person and you were trying to put your money or my money, if I'm putting my money on the direction of most high probability, it would be to the downside eventually here per the charts. And that's really what technicals are all about. It takes the guesswork out of it. You know, you're still taking a so-called gamble, but at least it's in the favor of the probabilities, aka odds. Essentially, you become the house or the casino, not the gambler. That's what the beauty of technical analysis really is. Now, here we take a look at this chart of the NASDAQ, right? And this is a really interesting one because we have this same trend line going back to April of 2025, connecting through 1, 2, and 3 lows. But then we have this short-term downsloping or descending trend line that is really squeezing price here to the point by within a week, we are going to either break out here or break down. Now, if we break out, is it a huge move? No. Ultimately, double top would be where you would expect us to go. So you'd expect us to go back to double top on the NASDAQ. On the other side, if we break down here, it probably coincides with the S&P breaking down. And then while you would have little stopping points there, then potentially here, it would likely be a bigger move to the downside on the NASDAQ as well, just like the S&P 500. So again, what this chart tells me is that we will know within a week, is the NASDAQ breaking out to go to double top, or is it breaking down, which could be the start of what I think is going to be a bigger corrective move in the overall markets. All right. And by the way, we'll get some more data this week. We have some very key economic data coming out. We obviously know later on we'll get the Federal Reserve in a few weeks as well. More guidance from that. There'll be a lot of potential triggers. And for me, the most important one is earnings season, which begins next week. And earnings season is key here because markets obviously are priced to perfection. Can stocks or companies deliver the robust growth that's going to keep the stocks up where they are? You know, even looking at the financials have had an incredible move. In fact, one stock to take a look at JP Morgan Chase. Look at this, guys. Now, what I love about this chart is look at the parallel and look at what we hit yesterday. So with JP Morgan reporting earnings next week, I would actually favor a move back down on the back of earnings. Not only is the stock at all-time highs, but look at the beauty of this parallel. I mean, literally, these pivot points match up perfectly to this bigger parallel. That should mean that this hit right here is a pullback candidate going in or into or through earnings. So keep that on your radar, guys. Interesting chart. Goldman Sachs, another financial, and look at Goldman Sachs. Goldman had this beautiful uptrend, kind of a parallel as well. But look at this trend line right here, connecting to the highs. And what do we know about this? You should get some sort of rejection off of that level. So even though financials generally report good earnings, the thesis here would be that they are priced to perfection based on technical analysis. They should be looking to pull back, or investors would anticipate a pullback on earnings, on, before, right after, whatever it may be. Price should start to come in on these plays. All right. 10-year yield continues to hammer on resistance. It's amazing how long this 4.2% on interest rates on the 10-year has been hammered. I mean, really, you go back to the beginning, about a month ago is when we started hammering on this line. Now, continues to weaken, but let's see, does the bull flag play out here? We have this up move. We have this consolidation pattern. It should resolve itself with a move to the upside. But again, let's see what happens in the coming days. Now, as always, occasionally I'll bring up the Japanese 10-year yield. It is continuing to rally higher. As of now, it hasn't caused any spooking in the U.S. markets or in the bond market. But my thesis, again, is if yields are breaking out on the 10-year, why are they breaking out? Well, obviously, a loss of faith in the financial system of the U.S. slowly happening. That pushes the long end of the curve up versus short ends, which is what the Fed controls. But also the thesis that if you have interest rates around the globe going up, a rising tide naturally is going to lift all boats, right? Because if we need people in the U.S. or if we need countries or big investors to buy our debt, and all of a sudden other countries are offering higher interest rates, investors are going to say, well, maybe I'll choose other places to invest or to buy their treasuries. And that can push other yields here in the U.S. to the upside. All right, couple stocks on my radar. Here's another beauty. I am a big fan of a short on Applied Materials at 290. It got close to that yesterday. But again, notice this beautiful parallel marking our low in 2022 to our low in April 2025. And here's your high in 2024. And look at what we've surged up almost in a straight line. And we're kissing the underbelly on Applied Materials. So on Applied Materials, just like the other charts, you would anticipate a pullback off that. Now, NVIDIA, we know that CES in Vegas is going on. CES is the big, kind of the big forum where all these big companies AMD, NVIDIA, they're all presenting their latest technology. Jensen Huang spoke yesterday in the after hours, our time, about the new kind of big offerings that NVIDIA is going to make. And one of the things that struck me is NVIDIA didn't rally. Usually when Jensen speaks, the markets, he's such a good salesman that the markets just eat it up. And what we're seeing here is we're seeing, NVIDIA basically selling off yesterday after tagging resistance basically again right here. And even today, it's up a couple dollars, but it's not up much. And I do think this is a change in character where we're starting to now we've broken this key trend line of support. Yes, we're rallying up into it, but this now is the line in the sand. As long as we remain below this line, the odds favor a downside move on NVIDIA. And Taiwan Semi yesterday, look at this, guys. It opened up and closed basically flat, pushing up again. Watch this trend line on Taiwan Semi right around 337 to 338. This could be a short-term top. And basically what I'm starting to see is more and more of these semiconductors are either underneath support, or I should say underneath resistance now, a la what we're seeing from NVIDIA. Or we could look at something like Taiwan Semi, which is almost maxing out its upside potential. Or we could go to Broadcom, and Broadcom, obviously, look at the down move on earnings, then look at the bear flag forming, and it's already starting to come back in. Gap fill should be on the horizon. So essentially, looking to me more and more based on technical analysis that the semis, which kind of had a rough struggle in December and maybe November, they've bounced, but now they're getting ready for their next leg lower. Again, contrary to what's popular belief out there. But again, I talk to the charts. I look at the charts. I give you guys that information. And that's what the information is showing in the technical charts. All right, a couple other charts here. Let's go over gold. Gold is inching up today. Remember, gold closed on last Wednesday, the final day of the year, below this trend line, but we never confirmed the breakdown. And so what I always tell you guys, and I teach this in the Winning Trader series, is that without confirmation, it could be a fake out. And so far, that has proven to be the case with gold pushing back up. Now, gold is going to have resistance around 4,575, this trend line up here. If it can break through that, I think 5,000 is pretty an obvious foregone conclusion, assuming it can break through this level. Same thing on the reverse. If we come down to this orange trend line and break and confirm below, then game on to the downside, probably 4,200. This area right in here would be a big support area. And then obviously 3,900, which was that former pullback low. Silver, same thing. Silver climbing up. But again, like I've told you in previous game plans, unless we can take out this high, the power of this reversal candle is still technically intact. And again, it's not me saying that. It's just that's what technical analysis teaches. It teaches that you have to go with the reversal candle until the reversal candle is negated, which makes really common sense if we think about it. Although, again, our personal feelings and emotions obviously get in the way sometimes in terms of what we want to happen. But ultimately, great move on silver yesterday and today. Interesting right here. This is going to be a very interesting level right around this $79.50 to $80 level, because, again, that's the body area before the wick up here or the tail up here. Watch that closely right there, this $80 level on silver. Oil, we talked about it already, beginning potentially to start a breakout. Again, a close today is great, but I want to see confirmation tomorrow to really ensure that it is a real breakout. And then look at this, guys. Natural gas, this is getting so close to an amazing, amazing trend line of support. This is going to be epic support. I am looking and excitedly hoping it gets down just a tiny bit more. Basically, anything between 305 and 310, there's this long-term support line, and this would be a good bounce candidate. So watch it closely here, guys. Natural gas, again, falling about 3.5% today, but it is, again, nearing an epic level where likely we will see a strong technical bounce. I would expect a bounce back to this area here, somewhere around the 360 level. So that would be about, 15, 20% upside potentially on nat gas. We'll see if it comes down and tags that trend line. Really interesting stuff, folks, in terms of some of these charts. Now, again, we have to keep our eyes on Venezuela and what's going on there. I still think it's important to reiterate that over the weekend when that news broke, if you went on social media, everyone was screaming sub $50 oil. And then what's oil doing? It's actually going the other way, which is the way the charts were dictating. And again, people not understanding because people use emotion. They don't think through the full trade. We talked about this yesterday, how, the infrastructure is going to take 5 to 10 years to build out just to get more oil out of Venezuela. So that's a long way out. Then you have, obviously, I think this was the biggest point I made yesterday, is that the oil companies, do you think they want to go in and pump a ton of oil so oil goes down to $30 a barrel? I'm going to go out on a limb here and say that Chevron and Exxon and ConocoPhillips and all these other ones, they really don't want oil going to $30 a barrel because their profits are going to fall off a cliff. And so, again, giving the oil companies in the U.S. that ability to build them out, they're not going to be rushing to pump oil. And again, you put these kind of things together, a lot of people have the aha moment of saying, wow, okay, now it makes sense why oil isn't dropping precipitously with what's going on there. And obviously, that's assuming everything goes smoothly with U.S. intervention, which history has shown us it really hasn't that often gone smoothly. So anyways, again, these points important because we have to change our mind. We have to shape our minds to think logically and think through things. And then using the charts, logic with charts, which is pure logic in the charts, it gives us the most probable outcome. Amazing stuff. It's why, again, verified investing is no hype, no BS, just charts. That's our motto here, and I hope to convey that to you guys. Go have a great day, guys. I'm going to get in the trading room. We had an amazing day trading day yesterday. Again, something like 8 or 9 winners, over 15K in profits. Come check us out there at the live Apex Live day trading room if you're a day trader. Otherwise, smart money services are there for you for swing trading. Have a great rest of your day, guys. I'll talk to you soon. Take care.
Previously on Crypto Combat.
Traders, let's get wrecked or rich.
Veterans, rivals, and one trader looking to stop a streak.
I just can't have him win more than 2 times in a row. I got to come back and stop this nonsense.
Big size, big conviction, and zero hesitation.
I put $100,000 short on Bitcoin. I'm already $40 in the money.
When confidence turns loud, the market starts listening.
This is too easy. It's just too easy.
That sounds like hockey talk to me. I think the market may punish him for that.
Multiple trades, multiple bonuses, and no room for mistakes.
Let's check out Polkadot. Polkadot now breaking.
Congratulations, you won 1 week.
Watch the full episode, because in Crypto Combat, discipline always has the final word.